For this session, we will now talk about your shareholders' equity or your equity portion. So, as you all remember, or as you all know, the basic accounting equation is equal to asset is equal to liabilities plus equity, wherein your asset was already discussed in your IA1, liabilities we just finished them, and now we are in your equity portion. Now, if you are maybe wondering perhaps what is that particular counterpart of equity that we have recognized before in asset. So if you still remember, in your asset, we have your investment in stocks. And when we talk about your stocks, you already know that that can either be ordinary share or a preference share. So you can invest in either ordinary share or preference share in your investment in stocks. Further, in your investment stocks, we can classify them under your asset as either asset or financial asset measured at FVTPL or FVTOCI. We also have your investment in associate in case we have more than 20%. Also, we have your investment in joint venture if you have joint control, and then investment in subsidiary if you have ownership of more than 50%. So that is the asset portion. Now we look into your equity portion. So for equity portion, what we learn mostly is the accounting of the equity shares as to the issuing company. Because here, for shareholders' equity, we are now the issuing entity. We issue shares. On the one who holds the shares, they call that as investment. So the one who holds the shares is an investment. So you record whatever type of investment is that. But on the part of the issuing entity of the one who issues the shares, we account for this equity securities or we account for these shares. Now, in shareholders' equity, we talk about two main items. We talk about your contributed capital or the amount of capital coming from the issuance of shares. And we also have your earned capital, which is likened to your amount of capital coming from your earnings or your retained earnings. So in contributed capital, we talk about your shares itself. So in your shares itself, we will talk about your acquisition of shares or issuance of shares. Then we have your reacquisition, reissuance, retirement, or conversion of these shares. So we will discuss all of these items today in your shareholders' equity, particularly on your contributed capital. Further, we will also talk about your subscription of shares. Aside from that, later later on or on our next schedule of lecture, we may talk about your contributed capital, particularly your recapitalization. So for shareholders equity, I divided our topics. For today, we will talk mainly on contributed capital, these items. And for next meeting, we talk about earned capital and recapitalization. So for today, our main focus again is your contributed capital. So let's start now and discuss your contributed capital or your shareholders' equity. So what is a shareholders' equity? A shareholders' equity is the residual interest of owners in the net assets of a corporation measured by the excess of assets over liabilities. So you already know this one because asset is equal to liabilities plus equity. To compute for equity, that is equity is equal to asset less liabilities. And you further know that your asset is the equity of your owners and your equity of your creditors. So when we talk about your equity of your owners over the assets, that means that the residual interest or whatever is left after satisfying your liability. Whatever is left after satisfying your liability. However, your shareholders' equity is composed by these items. So how do we compute for your shareholders' equity? First, your share capital. Your share capital can either be ordinary share or preference share, depending on your share capital or your share authorized. So once you are authorized as to your corporation, if you are authorized to issue shares, you can either issue ordinary or preference share. And take note, your share capital should always be recorded at par value. So what is a par value? You already encountered a par value, especially in your bonds. So every 1,000 band par, so that is the par or the face amount. So here, when we talk about par value in your equity securities, par value means one share that is equal to its face value. So for example, the par value of the share is 8. It means therefore that each share is worth 8 pesos. Each share is worth 8 pesos. Now take note, when we have your share capital, we have either OS or PS. But please, if it is only one type of capital, you do not need, no need to classify. But if ever it is two type of shares, you should classify. So how should we classify your share capital if it's two types of share? So you should place ordinary share capital for ordinary shares and PS or preference share capital for preference shares. Okay, so your share capital is your ordinary shares and preference shares always at par value. When we talk about par value, that is the share face value. So the face value of each one share. Now, if you only have one capital, then you do not need to classify. You can just place their share capital. But if you have two types of shares, you should classify them between ordinary share capital and your preference share capital. Next, we have your subscribed share capital. Your share capital is the amount of your paid up capital, while your subscribed share capital is the amount of your subscribed capital but unpaid. Okay? So these are all shares. However, in your share capital, once someone wants to buy a share, that is already fully paid share capital. But if not yet fully paid, we place it on your subscribed share capital. So if share capital is measured at par, your subscribed share capital is also measured at par. Sir, question, what if we do not have a par value? If there is no par value, you use the stated value. So whatever is the stated value in your articles of incorporation, you can also make use of that. Now, in your subscribed share capital, you should not only present it at the amount of your subscribed share capital. It must be reduced by the amount of your subscription receivable. So subscribed share capital less subscription receivable, we have your net subscribed capital. Okay, share capital and then net subscribed capital. Next, we have your share premium. Share premium is any paid up capital in excess of par. Okay? So your share premium is any paid up capital in excess of par. So for example, our share capital has a par value of 8 pesos per share. Okay. However, you have sold one share for 10 pesos. So we have excess of 2 pesos because our par is only 8, so you will record share capital at 8. However, you have sold it at 10, so we have an excess of 2. What do we call the excess? We call that share premium. That is the paid up capital in excess of the par. Our par is only 8, but the paid up is 10. Then we have an excess of 2 share premium. So share capital, net subscribed share capital plus share premium will give you your total paid up capital. So share capital is a paid up capital, the amount of capital that is already paid by the investors, while your subscribed share capital is the amount of capital unpaid, less your subscription receivable, plus share premium, the excess amount of your paid up capital will give your total paid in capital. So these items composes your contributed capital. Also, we have your retained earnings and OCI. So retained earnings, these are your earned capital. OCI, earned capital. So remember, OCI is an item of SHE. Less treasury shares, these are amount of shares that was previously issued. However, it was repurchased. So this is a reduction to the amount of your contributed capital. Reduction to the amount of your contributed capital treasury shares. After that, we can now get your total sheet. So these are the items that we will discuss in your shareholders equity. What are the treatment among these items? So as we go through, we must learn how to treat all of these items inside your total shareholders equity. So methods of accounting for share capital. We start now into the accounting of our share capital or the share issuance. So we all know that before a particular corporation will start, we have first to secure from the SEC an authorization or a certificate for us to start our corporation. So normally, the corporation will submit to the SEC AOI. What is the AOI? Your Articles of Incorporation, which contains now the amount of your authorized capital. So AOI contains the amount of your authorized capital. Now, once SEC approves of the corporation, then how do we account for this authorized capital? So there are two methods of accounting for this authorized capital. First is the memorandum method. The second is your journal entry method. So how does your memorandum method work? Your memorandum method work by making a memorandum entry only. So for example, authorize to issue 100,000 shares with par value of 5 pesos per share. Okay? So that is your memorandum entry. So how many shares were authorized for you to issue? 100,000 shares. Okay? So in this particular accounting, take note what we account is the authorized capital. So whatever is the authorized capital by the SEC based on your AOI, then we account for that, either memo method or JE method. So we go now with your JE or journal entry method. Under journal entry method, we debit unissued share capital and we credit authorized share capital. So here, since we are authorized to issue 100,000 shares at 5 pesos per share, what is our entry? We debit unissued share capital. We credit authorized share capital. So how do we compute for our unissued share capital? Your unissued share capital is equal to your par value multiplied by the number of shares. So since we have 100,000 shares and our par value is 5, so our entry is unissued share capital 500,000, authorized share capital 500,000. Okay? So that's the difference of the accounting under memorandum method and journal entry method. In your memo method, we will make a memo entry. But in your journal entry method, we will make a journal entry. The journal entry is a debit to an issued share capital and a credit to authorized share capital. As to your subsequent share transactions, generally what we follow is your memorandum method rather than your journal entry method. In your subsequent, when we record any issuance thereafter, normally what we use is your memorandum entry method. Okay, so how do we account for authorized capital? Memo, memo method, journal entry method. Next, we talk about your legal capital. So what is a legal capital? Legal capital is the portion of the paid-in capital which cannot be returned to stockholders in any form during the lifetime of the corporation. So what is the item of your paid-in capital again? To compute for your paid-in capital, it is composed of the following items. Remember our formula a while back? We have your share capital, we have your net subscribed share capital, and then we have your share premium. So when we talk about legal capital, we just need to look into the amount of this capital which cannot be returned. So we look as to the type of your shares, if the share is with par value or without par value. If the share is with par value, to compute for your total legal capital, you just get for your share capital issued, you add any subscribed share. While if it is without par value, you add the share premium in excess of the stated value. Okay, so in par value, we only have two items. But in without par value, we have the three items. That's the legal capital. So take note of the legal capital are amount of paid in capital that cannot be returned. So with par value, only two, share capital and subscribe share. Without par value, share capital, subscribe share, and the amount in excess of is stated value or share premium. But what is again, what item or what do you remember that is an exception to this rule based on what you have learned before in IA or intermediate accounting? An exception to this rule is your wasting asset doctrine or your liquidating dividends in case of a wasting asset. Why? Because in a wasting asset, you can still distribute in excess of your uh, retained earnings. So you can still also distribute the amount of your paid in capital if you still remember your wasting asset doctrine. So you can not only declare your retained earnings, but you can also declare as a dividend your capital. We call them your liquidating dividend. Next, organization cost. Your organization costs, examples are your legal fees in incorporation, so any fees you pay to your lawyers during the incorporation of a corporation, and incorporation fees paid to the SEC, share issuance costs or the cost of issuing the shares. So generally, the two items are expense outright. Okay, legal fees in incorporation, incorporation fees, they are expense outright. However, share issuance costs, what is the treatment? The stock issuance cost shall be debited to the following. First, your share premium from issuance, and then later, retained earnings. Okay? So, these direct costs, direct or indirect costs, the treatment is it is expense outright. While share issuance costs, what is the treatment? First, share premium during the issuance. If not enough, the retained earnings. Let's have an example. ABC Incorporated is authorized to issue 100,000 shares at 5 per share par value. During incorporation, the following transpired. So, issued 2,000 shares at 8 per share. Share issuance cost of 10,000 pesos. And then incorporation cost of 20,000 pesos. Okay. So ABC Incorporated is authorized to issue 100,000 shares at 5 pesos per share par value. During the incorporation, the following transpired. So issued 2,000 shares at 8 pesos per share. So SIC, stock issuance cost of 10,000, and we have your incorporation cost of 20,000. Okay. So first, we account for the issuance. So for the issuance, you issued at 8 per share. So we have here share capital. We will credit it at the amount of par value. Always your share capital is at par value. So 5 and the number of shares is 2,000. So this is 10,000. But how much cash did we receive? So we have 8 pesos per share times 2,000. So this is 16,000. So we have a difference of 6,000. We call that your share premium, as we said a while back in our initial discussion. Now, we have stock issuance cost. In your stock issuance cost, what is the treatment? First, on your share premium from issuance. So we deduct it to your share premium from issuance. So how much is our share premium from issuance? 6,000, right? But how much is our stock issuance cost? We spent 10,000. If there is an excess, if there is an excess, place in your retained earnings. So retained earnings, 4,000. Ganun yung treatment. Sir, paano kung walang share premium? Kung walang share premium, edi sa retained earnings. Kasi ang priority naman, if there is a share premium from issuance, use this one. If there is not, or it is not enough, then retained earnings. So in this case, the share premium is not enough, so we use retained earnings. But what if there is no share premium at all? Everything is at retained earnings. I hope we are clear as to the treatment of share issuance costs. Next, we account for your incorporation costs. So the incorporation cost is expense outright, so debit, organizational cost of 20,000 pesos. We credit cash. Again, so your organization costs, direct or indirect costs, as a general rule, expense outright. But as an exception to the rule, share issuance costs should be first reduced. What do we call this one? Share issuance costs should first be placed in your share premium from issuance. If there is none or it is not enough, you go to retained earnings. So in our example, not enough. So some are placed in your retained earnings. But if there is none at all, everything should be debited to retained earnings. I hope we're clear as to this organizational cost. We go now to your issuance of shares. The first topic for your share accounting. First is your issuance of shares. So in issuance of shares, generally you just need to compare the amount of consideration versus the capital. So you compare the consideration to the amount of your capital. So if the consideration is greater than capital, we have your share premium, issuance, or additional paid in capital in excess of par value. You already know that one. Share premium issuance is also known as APIC, in excess of par. If the contribute if the consideration is lesser than the capital, then what we do is we debit it to discount on share capital. If the share is issued less than the par value, we call it watered share. Okay? A share issued less than par. Okay. So in our example, we have 100,000 shares authorized at par value of 5 pesos per par. That is the authorization. So, for example, issued 2,000 shares at 9 per share. Another example, issued 1,000 shares at 3 per share. Okay, so we account for the first one. Issued 2,000 shares at 9 per share. So if we issue 2,000 shares at 9 per share, what is our consideration? 9 per share. What is the amount of our capital or par value? Our par value is equal to 5 pesos per par. 9 is greater than 5, so the difference should be placed in share premium, that is 4. So to account for it, we have issued it for cash consideration, let's say, at 9 pesos per share times 2,000 shares, 18,000. And then we credit it to share premium for the difference. 4 multiplied by 2,000, 8,000. And we credit share capital at par. Take note, share capital should always be recorded at par if there's no par at stated value. So share capital, 5 multiplied by 2,000, so 10,000. So if the consideration is greater than the par or the capital, we place it on your share premium. But if the consideration is less than the capital, we place it on your discount on share capital. So in example number 2, our consideration is 3 pesos. Our par value is 5. So consideration is less than. So we have a difference of 2. We place this one and debit it to discount on share capital. Okay, so let's try to record. We debit cash. How much is the issue price? 3. How many shares were issued? 1,000. So this is 3,000. And the difference is debited to discount on share capital. How much is the difference? 2 multiplied by 1,000 shares, 2,000. And then the share capital is always recorded at par. So what is our par value? 5 pesos per share multiplied by 1,000, so 5,000. Okay? So upon issuance of shares, these are the general rules. You just compare the amount of your consideration to your capital or par value. If greater, we have a share premium or also known as APIC. If lesser, it is known as discount on share capital. We go now to your specific rules as to your consideration. So let's have a quick recap on your specific rules. Do you still remember in your property, plant, and equipment, when you purchase a property, plant, and equipment by issuing shares, that is your non-cash consideration. So if we issue shares for a non-cash consideration, so we issue shares for the purchase of property, plant, and equipment, how should we measure it? We have a priority if you still remember. First is the fair value of asset received, fair value of the shares issued, and par of the shares issued. That is our priority if you still remember it. So when we say priority, if the first one is present, use the first one. If not, use the second one. If both first and second not present, use the third one. Next, in exchange for a liability. So in exchange of liability, if you still remember, we just finished this one together with your asset swap. We call this one your equity swap. Okay? In your equity swap, how do we account for it again? First, fair value of shares issued if present. If not, fair value of liability. If not, carrying amount of liability. So I hope you still remember how do we account for an equity swap. I don't have any problem as to this fair value and carrying amount because I know we just finished that. Okay? So this is just like a quick recap on your different rules as to the issuance of shares. Another specific rule is there if there is a two or more shares. If there is two or more shares, we use your relative fair value approach or your residual approach. In your relative fair value approach, we allocate the total basket price using the fair value of the shares. If only one fair value is known, we use your residual approach. Let's say, for example, issued for 8 million pesos, 100,000 shares with par value of 3 per share and 100,000 ordinary shares. And then let's say, palitan natin. Wag 100,000. 1 million ordinary shares at par value of 3 per share and 100,000 preference shares at par value of 20 per share. Okay? So let's use relative fair value. So for relative fair value, both fair values are known. So the fair value of OS and the fair value of PS. So let's see, the fair value of OS is 4 per share. And the fair value of PS is 30 per share. Okay. So to allocate that, we need to allocate the basket price because we issued it at a lump sum price of 8 million. So how should we allocate it? So based on the 8 million pesos for OS and for PS, we get first for their relative fair values. So for OS, we have 1 million shares. The fair value is 4. So this is 4 million. For PS, we have 100,000 shares. The fair value is 30. So this is 3 million. So total of 7 million. After that, we allocate now the OS and PS basket price. So our basket price is 8 million. We multiply it to our relative fair value. 4 over 7 for OS because we have 4 million. For PS, we have 3 million over 7. So how much is allocated? 8 million times 4 over 7 is equal to 4,571,428.57. Okay? And for PS, we have 8 million times 3 over 7. We have 3,428,571.43. Okay. So after we compute for the value of our OS and our PS, we are now ready to compute for or make our journal entry. So to make our journal entry, we get first for the value cash of 8 million. And then we have here ordinary share capital and then preference share capital. Then we have your share premium, ordinary share, share premium, preference share. Okay. So how much is the total allocated to OS? 4,571,000, 4,571,428.57. Remember, the capital should always be recorded at par. So let's say our par based on our example is 3 per share. So 1 million times 3 per share. So this is 3 million. So for share premium OS, whatever is the remainder, so we have here 4 million point 57 blah 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 less the 3 million par value. The share premium OS therefore is 1,571,428.57. Next, PS capital, how many shares? 100,000 shares. Par value is 20 per share, so that is 2 million. Now, to account for our SP or share premium PS based on the allocated 3.428 blah 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 less the par value of 2 million, we have 1,428,571.43. Okay, so that is how your relative fair value works. However, now, since we have share premium, any excess consideration is to share premium. Take note, the capital should always be at par. So we have here 3 pesos par, 20 pesos, 20 pesos par. Okay? And the excess is to your share premium. That is under relative fair value. How about your residual approach? So let's say residual approach, we only have OS fair value at 4 per share. So we can now record. So cash at 8 million, OS capital. So at par, 1 million times 3, 3 million. But since we allocate 4 pesos per share, so 4 less 3 times 1 million, we have 1 million share premium OS. How about your preference share capital? So since we will only allocate 4 to your OS, any excess will be given to your preference share. So your excess is 4 million, right? The preference share capital, how many shares? 100,000 shares at 20 per share. That is the par, 2 million. Since we still have an excess, so we have here 8 million less the allocation of 4 million to your OS fair value less the par value of 2 million of reference share capital. Then we have your share premium PS of 2 million. Okay? So based on your 8 million, how did we allocate it? First to known fair value OS, 4 pesos per share multiplied by 1 million share, 4 million. So for PS, we also have 4 million left. Clear? Okay. So in residual approach, you allocate first to the known fair value. Thereafter, you allocate it now to your unknown fair value, which is your PS. So here, our known fair value is 4 million to your OS, then excess to your PS. We go now to your subscription of shares. So your subscription of shares, a subscription is a written contract by which one engages to take and pay for the capital stock of a corporation in some future date. So as we said a while back, In your share capital, this was already paid. However, in your subscription or subscribed share capital, is still unpaid. Why? You only contract to purchase or to issue a share. However, it will be paid in some future date. So how do we record that? So we have three particular events in a subscription of share. So upon subscription, upon collection, and upon full payment. So upon subscription, your entry is a debit to subscription receivable, credit to subscribe share capital. This will always be at par, and the difference is your share premium. So, for example, subscribe 2,000 shares with par value of 5 per share for 8 pesos per share. Okay? Subscribe 2,000 shares with par value of 5 per share for 8 pesos per share. So we debit subscription receivable for the amount of our consideration, that is 8 pesos per share multiplied by the numbers of share, 16,000. And then we credit subscribe share capital at par. So what is our par value? Par value of 5 per share times 2,000 share, 10,000. And lastly, the difference, a credit to share premium, 16 less 10, we have 6,000. Or the difference, 8 less 5 multiplied by 2,000 will still give you 6,000. Now, upon collection, so let's say collected 6,000 of the subscription. So upon collection of the 6,000 of the subscription, your entry is only a debit to cash and a credit to subscription receivable, 6,000 pesos. And upon full payment, take note guys, your share capital will only be recorded upon full payment. Okay? Share capital will only be recorded upon full payment. So upon full payment, you record a share capital. But before that, we record the collection of the remaining subscription receivable. So we debit cash, we credit subscription receivable. So initially, we have 16,000 and we reduce 6,000 in our collection. So our final collection is 10,000. After that, we record now our share capital. So you just need to reverse the subscribed share capital, which is initially recorded at 10,000, and credit share capital of 10,000. Okay? That's how we will account for your subscription of shares, if ever there is a full collection. Because in subscription of shares, our main problem is if there is full collection or there is a delinquent collection. So when we say full collection, of course, we receive the full payment. But if there is the delinquent, there is a subscription. However, it was not paid. However, it was not fully paid. So how do we treat your delinquent shares? So subscription of shares in case the shares are delinquent. So this happens again if ever the whole amount of the subscription is not paid. Therefore, he may be declared as a delinquent subscriber. So if that is a delinquent subscriber, you need to know whether it is auctioned or not auctioned. So if it's not auctioned, it is treated as if a forfeited down payment. So we look back on our example. In our example, we have 10,000. Wait. So we have 2,000 shares at 5 par value. So it was subscribed at 8 per share and we have already collected 6,000. Okay? So we go back to our previous example without yet the full payment. So we have here 6,000 that was already previously paid. If that is not auctioned, it is treated as a forfeited down payment. So you debit the subscribed share capital at par. So 2,000 shares at 5 pesos per par, 10,000. You debit the share premium initially. So how much is the share premium initially? So that is 8 issuance, 8 pesos, less 5 pesos par multiplied by 2,000. So we have 6,000. You remove the balance of your subscription receivable. So we have 16,000 less the collection of 6,000, 10,000, and whatever is the collection, it is treated as a forfeited down payment. So if it is treated as forfeited down payment, you credit share premium forfeited 6,000. So as you can see, guys, you just need to remove the subscribed share capital and the share premium initially recognized at the time of subscription. And then we credit any subscription receivable remaining. And whatever is the amount of your down payment, it is treated as a forfeited down payment. So in this case, the 6,000 amount of payment is treated as share premium forfeited 6,000. Now, what if it is auctioned? We have the concept of a highest bidder. So the question is, who is the highest bidder? The highest bidder is the bidder who is willing to purchase the lowest number of shares for the highest amount. Okay. But what is that amount or what is that price? That price is composed of three items. First, of course, is the balance of subscription receivable. Next, any interest out of that subscription receivable. And lastly, any expense on auction. Okay. So the highest bidder is the bidder who is willing to purchase the lowest number of shares for the highest amount. So the amount is equal to your balance of the subscription receivable plus interest plus the expenses on the auction sale. So here in our example, our balance of subscription receivable is 6,000. Let's say we do not have an interest, and in our expenses on auction, we have 10,000, total of 16,000 pesos. I know. Our total balance of subscription receivable, we have received 6,000 lang pala out of 16,000, so we have 10,000. Expense on auction, 10,000, total of 20,000 pesos. So that is the price. So for highest bidder, how many shares is the delinquent shares? 2,000, right? Okay. So if that is an auction sale, the highest bidder should bid the lowest number of shares for the amount of 20,000. So with your highest bidder, we have two types of record. First, the recording of your collection. Next, the recording of your issuance. First, we need to record the collection. So to record the collection, we debit cash the total price of 20,000. We remove the subscription receivable balance, 16,000, let's do 6,000 payment, 10,000. And then we remove any advances on auction sale, which is the amount of our expense of 10,000. Okay? The expense of 10,000 is known as advances on auction sale. After that, we record the issuance of shares. So we remove subscribed share capital and we credit share capital at par. So how many shares? 2,000. What is the par value? 5. So 10,000, 10,000. Okay? If there is a highest bidder. So if there is a highest bidder, take note, willing to purchase the lowest number of shares for the amount. The amount is equal to your balance of the subscription receivable, any interest if there is given, and any expenses on auction if there is given. But what if there is no highest bidder? If there is no highest bidder and the corporation can acquire, then how do we treat it? We treat it as if a treasury share. So what is our entry then? Guys, instead of cash, our entry here is already treasury share, subscription receivable, and the advances. 20K, 10,000, 10,000. That's how we will treat it. Are we clear? So if there is highest bidder, of course, we will receive the cash. But if there is no highest bidder, we treat it as treasury shares. If the corporation can acquire treasury shares, 20,000, subscription receivable, the balance, 10,000, advances on uh, the auction sale of 10,000, and subsequently, we record the subscribed share capital and the share capital of 10,000. So in your auction, the main difference is on the collection. In your collection, if there is highest bidder, it is cash. If without highest bidder and the corporation can acquire 20,000. But the question is, what if it is without highest bidder and corporation cannot acquire? Because here, auction, if they're highest bidder, then no problem. What if there's no highest bidder? It is subject to the corporation can acquire. If the corporation can acquire, it's TS. But what if it is without highest bidder and the corporation cannot acquire? If it's without the highest bidder and the corporation cannot acquire, then you treat it as if a forfeited down payment. Okay? You treat it as a forfeited down payment. Are we clear? Without highest bidder can acquire
Hello.
TS. If without highest bidder and cannot acquire, forfeited down payment. Okay? That's it for our subscription of shares. So we just finished talking about your subscription and how do we account for it in case there is a full collection of our subscription and in case our subscription is considered a delinquent subscription. We go now to another topic for your shareholders' equity as to your contributed capital. We call it your reacquisition of shares. So for reacquisition of shares, what we have here is a previously issued shares known as your share capital, and then you will repurchase them. You will repurchase them. So you issued it already and you will repurchase them. We call them reacquisition. So in reacquisition of shares, these are called treasury shares. So these reacquired shares, take note, are known as treasury shares. These are the company's own stock previously issued. However, they are reacquired but not canceled. Now, in your reacquisition of shares, we talk of the following items. First, on your reacquisition. On your reacquisition, it should be recorded at cost. So whatever is the cost of the reacquired shares, we debit them to treasury shares, we credit them to cash. Remember, what is the effect of treasury shares? It decreases your total shareholders' equity. So we record it at cost. So for example, we repurchase 2,000 shares with original issuance price of 8 per share and par value of 5 per share for 10 pesos. Right? We purchased 2,000 shares with original issue price of 8 per share and par value of 5 per share for 10 pesos each. Okay. So we should record it at cost. What is the cost of the repurchase or reacquisition? So we repurchase 2,000 shares for 10 pesos. So we just debit treasury shares, we credit cash at the amount of our repurchase. So 10 pesos, the amount of consideration multiplied by shares, 20,000. Okay, that's how we will make our entry. Now, after your reacquisition, what happens thereafter is a reissuance. So there is a possibility that after you repurchase them or reacquire them, you can reissue them. So you issue, you repurchase, but you can also reissue. So in reissue, you compare the reissue price versus the reacquisition price. Compare the reissue price versus reacquisition price. If ever reissue price is greater, then we place it to share premium TS. If lesser, we place it first to share premium TS and then RE. Do you still remember this one? Yung first share premium, if enough or not enough, next is RE. Katulad kanina, nung nag-discuss tayo ng ating share issuance cost. Yung pagka kulang siya, share premium TS muna. Pag kinulang yung share premium TS, edi RE. Kung walang share premium TS, lahat RE. Okay? Sana naalala nyo pa yung kanina. So, let's say reissued 1,000 shares for 11 per share. Okay. So, what is the reissue price? Our reissue price is equal to 11 pesos per share. And our reacquisition price, we have here 10 pesos per share. So greater yan. We have 1 pesos per share. We place that in your share premium TS. So how do we make an entry? So we debit cash on the amount we receive, 11 pesos per share. How many shares? 1,000 share, 11,000. And then we remove the treasury shares at cost. So 1,000 shares, that is 1,000 shares. The cost per share is equal to 10. So 10,000. And then the remainder is share premium TS, 1 times 1,000. So 1,000 yan. Okay, take note, treasury shares are recorded at cost. So the cost is 10, the cost is 10. Clear? Right. So the difference, if the reissue price is greater than the reacquisition price, we place them on your share premium TS. What if lesser? What if lesser? So let's say we reissued 500 shares for 3 per share. We reissued 500 shares for 3 per share. So how much is the reissue price? 3. What is the reacquisition price? 10. So it's less than. The difference is 7. So how do we record that? First, we record the cash. The cash is 3 pesos per share, 500 shares, so 1,500. So the difference, first to share premium TS. So how much is the difference? 7 times 500. So this is 3,500. How much is our share premium TS? We only have 1,000 share premium TS. So we can only reduce up to that extent. Okay? Kasi nga ang rule natin, pagka kulang yon, up to that extent lang. Okay? Pag not enough na, sa susunod na yung RE. So since 3,500 yan, 1,000 lang yung nakaya ng share premium TS, meron pa tayong 2,500 for RE. And then, we remove now our treasury shares at its cost, 10 times 500, we have 5,000. Okay? So, balikan nyo lang yung rule natin kanina na pag kulang yung share premium TS, edi RE. Pag walang share premium TS, edi RE. Sir, paano kung sakto naman yung share premium TS, edi lahat sa share premium TS. Ganun lang naman yung rule. Okay? Huwag niyong kalimutan yung mga rules na ganyan. Pag not enough, doon sa second na. We go now to your retirement. So for your retirement, in case you will want to cancel the shares. So in this one, we are now canceling the shares. So we compare the issuance versus reacquisition price. But before that, we need to remove the original issuance, the share capital and share premium, and then we remove the treasury shares. So here, take note, the 2,000 shares, which was originally issued, was at 8 per share. Par is 5 per share for 10 pesos. So the original issuance is 8 per share. We need to remove that. So debit, share capital, debit, share premium. Ilan na lang yung natira? Kung 2,000 yung unang shares, nag-reissue tayo ng 1,000, nag-reissue ulit tayo ng 500, ilang shares ang natira? 500 shares. Tatanggalin mo yung par ng 500 shares. 500, the par value is 5 per share, so 25. Tapos, tanggalin mo rin yung share premium ng original issuance. The original issuance price is 8 per share. If the par is 5, so 8 less 5 times 500 is 1,500. And then, you remove the treasury shares at cost. What is the cost of the treasury shares? 10. 10 times 500 is 5,000. Okay. So the original issuance price is 8. The reacquisition price is 10. Less than siya, lagay daw siya sa share premium TS. May share premium TS pa ba tayo? Wala na. Kaya ilalagay na natin siya sa RE. So you debit RE for the difference. How much is the difference? 2 pesos per share. So 2 times 500, 1,000. Okay? So retirement yan. As you can see here, from 2,000 shares reacquired, we reissued 1,000 for more than, and then we reissued another 500 for less than, but we retired the last 500 for less than. Okay? So the share premium, the issuance, you compare the original issuance price, 8 per share, to your reacquisition price already. Okay? I hope we are clear. But sir, what if it's greater? Eh di mas madali. Wala naman ng kailangan na i-test. ilagay mo na lang agad siya sa share premium retirement. Dito kasi ang nangyari, magre-reacquire ka muna before you will retire. You reacquire first before you retire. Later, we will discuss a direct retirement. Next, we discuss about your donated capital. So for your donated capital, if you still remember, this was discussed in your PPE. So your donations can be classified as a donation from your shareholder or a donation from the government or from others. If it is donation from shareholder, we call it donated capital. If from the government, we call it government grant. For others, we treat it as income. Now, for donated capital, what we need to think here is asset was what type of asset was donated to us. Is that an asset only or our own shares? If it is an asset, upon receipt of the donation, you recognize donated capital at fair value. If that is an asset, upon receipt of the donation, we will recognize a donated capital at fair value. But if that is an entity's own share, you will only recognize donated capital upon sale. Ingat kayo dito sa donated capital. Ito lang yung gusto kong alamin nyo dito. Pagka asset yung binigay sa inyo ng shareholder, kailan magkakaroon ng donated capital? Pagka na-receive mo yung donation. At what amount? At fair value. Pero pagka entity's own share, kailan ka magkakaroon ng donated capital? Pag nabenta mo na siya. Donated capital. At what amount? Of course, at the selling price. At the selling price. Clear? When do we recognize donated capital for an asset received from a shareholder upon receipt of donation? When do we recognize donated capital for entity's own shares donated by a shareholder upon sale? Ingat kayo dito. Donated capital. Next, we have your the recognition of share capital. So, andito na tayo sa the recognition, which is your retirement. So, for your retirement, we just debit share capital, we debit share premium issuance, and we credit cash. As you can see, it is almost the same with what we have learned a while back in your retirement. Kanina lang kasi, dun sa treasury shares, anong ginawa natin? We debit cash, we debit treasury shares, we credit cash. And then eventually, we debit share capital, we have your share premium, and then your treasury shares. So there will only be a balancing figure, if you still remember. This one, in your retirement, it is a direct retirement. The other retirement is a reacquisition, then subsequent retirement. This one, direct. So since direct, hindi na yan papasok sa TS. Wala ng TS. Kaya magiging entry mo na lang, debit share capital, debit share premium issuance, you credit cash. Your balancing figure is a debit to retained earnings if kulang yung debit, if kulang yung credit, share premium, retirement. Alam niyo naman na itong balancing figure. Na-discuss naman na yan natin kanina. Next, conversion. Pag nag-convert naman tayo, what we convert only is from OS to PS or PS to OS. So this one is a PS to OS. Whatever is the balance of the PS converted, it will be transferred to your OS. So the consideration here is the balance of PS. Okay. If the balance of PS is greater than the par value, then we will have share premium OS. If the balance of PS is lesser than the par value, then we have retained earnings. Okay? Conversion to conversion. Iba yung kanina. Kanina kasi consideration. Ito, conversion. Doon sa consideration, tandaan nyo, meron tayong discount on share capital. Dito, pag less than RE. Because we just converted a previous equity account to another equity account. Okay? So those are the items that we need to discuss or we need to learn in the accounting of your contributed capital. Remember everything that we have discussed from your consideration until your derecognition. Please do not forget the rules because again, what will be asked here is not the journal entry. What is asked here later on is what is the adjusted capital, what is the amount of share premium, what is the amount of our treasury shares, what is the total SHE. Those are the items that will be asked. You will not be asked about the entry because entries are to be asked generally on AE 100. Since we are in higher accounting, the balances will be asked to you. So I hope you remember the rules. What is the effect? Will it increase share premium? Will it decrease share premium? Will it increase retained earnings or will it decrease retained earnings? Or what is the effect on your share capital? So please remember those rules. For our next session, we will discuss now on the other part of shareholders' equity. That is your earned capital and then finally recapitalization. That's it for this session.